What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 43. It's August the 9th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about all of our important levels that we have on the chart today. So we have yesterday's closing price down here at around 35,388, and that's going to play a major role in today's session. And we also have the zone above yesterday's closing price. I based this zone based off a consolidation area that was established in the pre-market, as well as the same concept for this zone above. So without further ado, let's go ahead and get straight into it, and let's talk about trade number one. But before we even get into trade number one, let's actually talk about the overall picture and the type of day that we came into today. So when the market opened, notice what happened before the market opened actually. So we were in a nice little downtrend before the market actually got going. So let's actually hop on the live chart real quick and just see what happened in the pre-market. So in the pre-market, we were trending down for a good amount of time, really since 5 o'clock this morning during the London session. The trend has been down. So you would expect that when you come back into the market as the market opens at 9:30 for the New York session, you would expect for the downtrend to continue, right? But the characteristics of the market changed up as soon as we opened. So let's jump back to 9:30 this morning to see what happened. So notice how we went from being in a downtrend and we kind of transitioned into more of a range bound market where the top of the range was the top level of the zone that we established from the pre-market. That price level was 35,420, and we went down to a low of about 35,360. Now these wicks kind of pushed past it a little bit, but everything was able to close within that level around 65. So that's why I used that one to define the bottom of the trading range. So we kind of traded back and forth in between those levels. Now, once I saw this double top get formed and we came all the way back down to the bottom of the zone, I immediately started going through my notes and looking for days that were similar to this, because I remember I've seen this type of day multiple times. So let's go back to some earlier days. This was the first time I ever saw this, July 14th this year. Notice how we had a very similar situation where we had a trend that was going before the market opened, but as soon as the market opened, we just started trading within a range until eventually the range was broken. But look at how long the range lasted. And when I look back on this day on July 14th, when I was doing my trading review for that time, I was like, dang, man, we were stuck in the range the whole time, but I didn't realize it until it was too late. But I ended up seeing this day again on July 31st. Now, it's not exactly the same as July 14th. The range is a lot bigger and it's a lot more trendier in between the extremes of the ranges, but the similar concepts that I saw from July 14th also applied on July 31st. Notice how we had, instead of a double top like we had on July 14th, we had a double bottom, but still the concept of us trading within a certain trading range remained the same. And I actually was able to take one of my best trades on this day at trade 13. I caught like 60 points off of this one. And I only took that trade because I was confident enough to believe that the range would hold, because I've seen a day like this before. So then when I came into today's session and I saw the same thing, I was like, that's very interesting. I think I have a good idea about what I'm looking at. And I used the same concepts that I used from July 31st and July 14th to trade what I was looking at today. So now let's go ahead and get into trade number one. So I went short here expecting for resistance to hold up. But what I need to remember is I need to remember to let prices test my levels before I enter. And that's very important, because if we go back and look at all of our previous days, anytime we got back up to the major level of resistance for the trading range, we had a reaction back down to the downside. But it doesn't always mean that the reaction is going to happen immediately. You always got to respect the market no matter what. So even though I might feel as though this level is the level that I want to short from, I want to see prices come to that level, have a reaction around it. And if I like the reaction that occurs, then I'll go ahead and enter my position that I was looking to get into, but only after I see that confirmation. That's the biggest lesson I took away from trade number one. Now, luckily, I realized my mistake while I was actually in the trade, so I was able to cut that for a little small loss. I think I lost about maybe 5 or 6 points on that one, so not too bad. And then on trade 2, I re-entered that short trade as prices pushed back down into the zone. And that's actually the best way to enter when you're trying to get into that zone. You want to see prices come up to that level. If they want to push past it a little bit, okay, fine. But if they close back below that level that you're looking at and you're looking to go short, then that's when you have your confirmation. So at 2, my entry was good. Now, the only thing about 2 is that I expected for the lows to be hit, but my break even stop ended up getting hit instead. Now, because I shorted from the top of the zone, I was just expecting for prices to come back and retest the bottom of the trading range since we shorted from the top, right? But sometimes the trading range isn't always going to be perfect. I've seen a lot of instances where I'm trading either a trading range or a consolidation zone where you might short from the top of the range or the top of the zone, but prices are going to come back to retest that level one more time, maybe sometimes 2 more times before they actually make that move that you was looking for. So usually on a trade like this, on trade 2, I would say that I dropped the ball by not taking profit when I had good profit levels to get out at. But in this scenario, because I was trading the trading range, it really only made sense for me in my head to take prices from the top of the range back down to the bottom. And if I can't get that trade, then I'm okay. So I was okay with taking that break even trade right there. I think I made the right decision on that one. But then we see prices after trade 2, we see prices continue up through the zone and eventually break through above the zone. So at this point, I'm like, you know what? Now that we formed a higher low, I believe that it's only 2 things that could happen in this scenario. Either the breakout continues and the uptrend keeps moving, or we have a false breakout and then eventually we get pushed back into the bottom of the zone. So what I tried to do was play both sides of it, which looking back in retrospect, it really doesn't make that much sense, because if I felt like we were in a trading range day, I really shouldn't be trying to trade in terms of thinking that it's going to be a trending day until I see more concrete signals. Seeing that first higher low and a breakout of the zone is the first signal that tells you that, yeah, we're probably about to start trending. But you don't really want to get in on the first signal. Maybe wait for another signal to give you more confirmation, like, oh, okay, we had one higher low and then they continue to do bullish activities to show us that they wanted to start trending. But the first higher low, what I've been learning is that when you trade a higher low that comes after an extended up move, the probabilities of that higher low acting as a level of support decrease. And let's go back to some previous days and actually look at more examples of that, because I went through the same thing on August 1st this year, also up here at trades 4 and trades 5. So if you look at this day, notice how we had a very large move to the upside, consolidated for a bit, and then we broke out. But once we broke out, for me to go long up here at 4 and 5, if we read the notes, it says I entered too late during the trend. And that's pretty much the overall theme of going long at higher lows that are much higher in the uptrend. You just have less participation. That's the only thing, because think about it. Everybody that already wants to buy has pretty much bought anywhere within the start of this swing, somewhere within this consolidation, or if anything, they bought when prices broke out of the zone. But for you to expect for prices to continue to see upward momentum without having a substantial pullback after they're so far extended, it's not that it can't happen. It's just that the probabilities of that being successful when you go long from those higher levels in the uptrend, they decrease. So you always want to wait for that pullback. And even though that higher low after an extended up move might look so tempting, you got to really do your best to fight that and just analyze what's going on in the market. It's nothing wrong with skipping a trade if you feel like, yeah, it's my setup, but I don't know if it would work at this time in the market. It's always okay to skip that trade. And another example is from July 31st. Let's look at trade number 3. Yeah, right here we had an extended up move to the upside, right? We had our higher low get formed. And when I saw prices come back to retest that higher low, I went long, right? But look at this, respect the daily high. And that is very important when you're trading within a trading range. You always want to remember that even if you get a higher low towards the highs of a move, you got to remember that more people are looking to sell than they are looking to buy. So that means that more than likely, when you get to those extremes of the move, you're not going to see continuation. Instead, you'll probably see profit taking. And that first wave of profit taking is going to push the market down. When the market moves down, all of the people that were expecting for the breakout to the upside to fail, then they start hopping in on the short side. And now, as a buyer, you're trying to fight against two waves of selling, and more than likely, that's not going to work out for you. So that's why it's so important to remember the type of day that you're trading and use the right types of entries accordingly to match the type of day that you're trading in. So that's the biggest lesson I took away from trade 3. Like, even though you see your higher low setup, you got to remember that the market context and the type of day that you trade is extremely important. Always remember that. So then after trade 3, we pretty much pushed back into the zone on very strong momentum. And once I saw that, I was like, okay, if we had momentum to push us to the upside and break out of the trading range, but then we immediately came back, that means that everybody who went long up here, or who went long from yesterday's closing price once we made this higher low right here, all of these buyers over here either need to get out of their positions at break even, or get out of their positions and take the losses that they may have, which is only going to lead to more selling. So with that in mind, in combination with the fact that we are in a trading range and we came back into the trading range, my thought process here was to short the first higher low. So if we read the notes, I shorted the first higher low that I saw once prices broke back below the zone, and then I took prices back down to the bottom of the trading range. So pretty much I just traded in line with what I saw. I knew that once we broke into the trading range and we had strong momentum coming back into it, all of the buyers that were trapped in combination with all of the sellers that were looking to go short would probably give the market enough momentum to come back down and test the bottom of the range. So I just simply analyzed the day that I was looking at, and I tried my best to use the right types of entries and the right types of trades to be able to get the maximum amount of profit that I could. So overall, man, I feel like I did a very decent job today. You know, I came in, I read the market, I understood what I was looking at, and then I traded accordingly. Now, there were some little small details in that plan that I could do better on. I think trade 3 is really the biggest lesson. I don't think I'm going to make that mistake ever again, because not only have I learned to not go long at higher prices when you're in an extended upswing, but I've also learned that the moving average plays a big difference. Because even though I don't trade with a moving average, I've seen enough moving averages to kind of have an idea about where the average should be. So if we look at today's chart and we were to slap an imaginary moving average on here, I would probably guess that a 25, well, let's go with a 50. I would say a 50 period moving average. At the time where I went long right here, the moving average was probably somewhere down here around where I got stopped out at on trade number 2. So for me to be going that long, for me to be going long at so high prices, it just doesn't make sense, because for one, we're way above the moving average and most people are not going to go long. And one thing about getting into a trade is that you always want to make sure that everybody else in the market is participating with you, or else it's not going to work. So that's really the biggest thing I got to clean up. But other than that, I think I did a decent job today, and I'm proud of myself. Came in, handled my business. Now, going forward, when it comes to my back testing session, I still want to focus on drawing my levels up the right way, taking the right trades, and only taking trades that align with my trading plan. I think that's also a really good thing I did today. I made sure that I didn't take any BS junk trades. All of these trades, 1, 2, 3, and 4, I could go back to my trading plan and find specific examples of when I did this in the past and saw success with it. So check mark on that. I did a good job of that today, and I just want to keep that going forward into the future. So I hope you guys learned a lot today about identifying the type of day that you're trading, and then using the proper entry setups and the proper entry methods to take advantage of that trend and maximize your profits. And I also hope you guys learned a lot about avoiding those long trades when you're in the extended and mature portions of an overall uptrend. So I hope you learned a lot about that today, because I definitely did. It's been a good day. Tomorrow is August 10th. I'll be back tomorrow between 9:30 and 9:40 in the morning. Also, today's live video is up on trading my scalping strategy playlist over in my live video sections on my channel, so make sure you check that out if you haven't. But that's all I got for today, you guys. Appreciate you tuning in with me. I'll see you tomorrow, but until then, take it easy.